helping people understand what green finance is, what good green finance looks like, and see if we can then and have some questions answered. What I'm going to do is I'm going to let the panel introduce themselves, and then I'm going to talk on particular aspects of green finance, and then we can open up to question and answer. So anybody standing outside, please come on in. You know, you're very welcome to come into the tent. Make yourself comfortable on the hay bales here. So let's start with Elizabeth. Do you want to introduce yourself? And you're going to talk a little bit about what good green finance looks like for climate.
Hello. There we go. Hello, and good morning, everyone. I'm Elizabeth Beall, Managing Director at Finance Earth. Those that aren't familiar with us, we're an employee-owned social enterprise established about 7 years ago, really with the mission to mobilize more private capital for nature, climate, and communities. And so happy to be working closely with partners like the Wildlife Trust on what does good green finance look like. So my assignment today is to talk about specifically what does good green finance look like for climate. So I thought I'd do that a little bit by making that all about C's. So what does good green finance look like for climate? First that comes to mind is credibility. So how can we ensure that not only is what's being delivered actually achieving that climate impact that buyers and investors will be looking for, but is also measured and verified in a way that is, again, meeting those expectations, but also for project developers that are delivering that climate impact, that they're able to really say, this is what I've achieved and I'm selling a real outcome. So that credibility is absolutely crucial for the whole market to work from all levels of perspective there. Second C, community and collaboration there. So that's a dual one. We've seen a lot in the past of where investors were drawing out most of the benefit from projects. You've heard probably many of the international examples over the last year. And communities haven't been as involved, or and local stakeholders haven't always been included in project design or been included in the overall benefit sharing. So when you're looking at revenue that's generated from the sale of carbon credits, it's really important to think about what share of that revenue is going directly to the communities and stakeholders that are delivering those projects of nature restoration, which are generating those carbon credits. So designing those projects collaboratively, ensuring communities are involved in that, but then ensuring that they're also receiving a share of the benefits. Then the third, or fourth, as I've done here, is around capital. So we have a frequently saying at Finance Earth, the right capital in the right place. So there's a role for public capital. So there's definitely a role for grants and public funding. To be looking at, where we are today, the role of ELMS and SFI payments, absolutely crucial. But in needing to ensure that, public capital is going towards areas where there's less of a role for private finance or a need to de-risk and crowd in more private capital. So looking at what's the right capital for the right thing or activity in the right place in order to ensure that we're actually scaling and mobilizing more funding overall. And then if I'm allowed a few bonus C's, given as well where we are today, looking at supply chains. So that chain is really important. We've seen a lot of interest from corporates in particular who are saying, I don't want to buy credits just in the open market. I want to look at how I can directly reduce and remove carbon in my supply chain. So I want to engage directly with farmers, directly with processors and producers on how I can do that. And I'm willing to pay for that rather than go buy credits. That's also following the overall kind of debate around what is and isn't allowed in terms of offsets. So we're seeing that trend growing quite considerably. And then also looking at the calendar. So what can be done right now? The advantage of nature-based solutions and on-farm interventions is that those can deliver both reductions and removals today, not in 50 years' time. And that's where we really need to be looking at how we can drive more finance to those activities which are going to help and deliver improvements that we need to see today.
Brilliant. Thank you very much, Elizabeth. If anybody's got some questions, hold those questions, scribble them on a piece of paper or hold them in your heads. We're going to take questions after the introductory panel sessions. I got 1 billion from that, but as chair, I'm going to keep quiet. We're now going to move on to Phoebe, who's going to talk about what does good green finance look like from a nature perspective.
Thanks. So I'm Phoebe Cox, and I'm the Green Finance Manager at the Central Wildlife Trust team. So in my role, I sort of coordinate all things green finance, be that sort of our internal sort of knowledge sharing, getting more wildlife trusts and partners involved in green finance initiatives, and then also to sort of external forums, events, and making sure that nature is really staying at the heart of the green finance debate. And sort of prior to this, I've only been in my role 8 months. I worked at Derbyshire Wildlife Trust, where I set up their first biodiversity net gain habitat bank, and that's where I really got stuck into all things green finance. So what is good green finance from a nature's perspective? So I think I'll firstly sort of call on the nature market principles that I don't know if many people are aware of, but they were published last October, and they were co-produced by Finance Earth, the Wildlife Trust, and a number of other NGOs. And they picked up some really important principles and standards around what good green finance is. And so that's a really good place to start. Things like science-based delivery, permanence, additionality, financial prudence. But at the Wildlife Trust, whilst all of these are really important, we really believe permanence is a really good sort of indicator of good, high-integrity green finance. And we do recognise that that doesn't come without its challenges, particularly at the moment when prices for some credits and units are so low. For example, if we take carbon, woodland carbon averages about £25 per tonne, which if you're thinking about delivering anything more than sort of a really high-density woodland plantation, you're quite challenged. But we are seeing developments in this space. The recent Aviva Atlantic Rainforest Programme, which is a Wildlife Trust carbon delivery programme with Aviva, is all about delivering really high quality carbon that values nature and all the other co-benefits. And whilst this programme doesn't boil down to a cost per credit, if you did extrapolate the figures, it's a lot higher than £25 per tonne. And this leads me on to my second point, which is all about buyers. And good green finance needs good buyers, good fair transactions and transparency. And as we all know, there's a huge financing gap in nature's recovery. So finding good high integrity buyers is going to be sort of crucial to delivering nature's recovery. But we all need to play our part in finding good buyers, and this means doing our due diligence, making sure that we're not selling to unscrupulous buyers as part of greenwashing schemes, but also not undervaluing our services and really recognising that the value that we're delivering through nature is high value, and not undervaluing it and devaluing sort of the market. And there's also sort of a flag there that selling to potentially a cowboy scheme or engaging in something like that doesn't necessarily just have damage for you as an individual or an organisation. As we've seen in the carbon market, it's really caused a lot of lack of confidence and issues that have come about from that. So really, we need fair pricing and good buyers that are happy to pay those prices. And then my final point would be on delivering beyond offsets and mitigations, really aiming for nature positive outcomes and maximising wider co-benefits. And there is sort of actions and dependencies around that for both buyers and regulators, but also us as sort of delivery partners. So for the buyers and sort of regulators, we can take biodiversity net gain as an example. So that's great in the sense that it's aiming for 10% above zero. But when we look at how it's happening in practice, 10% isn't actually achieving too much more than sort of just maintaining status quo. So for buyers and regulation, we want to aim the bar higher than 10%. We want to work with buyers that are looking for 10, 15%. And then in terms of delivery, how we deliver biodiversity net gain, carbon, nutrient neutrality to really maximise the value to sort of society. So this can be sort of how we deliver it. So using nature-led, low-carbon delivery models to make more resilient habitats, providing access on our nature reserves or green finance delivery sites, so we're delivering those wider health and community benefits. But then also sort of thinking where we're locating all these green finance initiatives. Can we locate them in an area that needs natural flood management? Are there nature recovery networks? So really thinking about when we're working to deliver something, how it fits into that bigger picture of green finance and also all the other partners working in this space.
Well, thank you very much, Phoebe. And for those of you just joined us, we're the Wildlife Trust, and we're talking about what does good green finance look like. So please do join our panel discussion. We've only just started, so you haven't missed much. please do come in and enjoy the shade and so on. Phoebe talked a lot about buyers there. Duncan, you're going to introduce yourself, and I think you're going to talk about good green finance as it relates to buyers.
Thank you, Rob. Yeah, so I'm Duncan Royale. I'm a senior consultant at EFTEC, which is Economics for the Environment Consultancy. We're one of the first and the oldest established environmental economics organisations. So what we specialise in is trying to make visible the multiple benefits of nature and the environment, and use that to make better informed decisions about managing natural assets. And my particular specialty is sort of natural capital and natural capital accounting. So yeah, I've been asked to talk about buyers, and some of this has already been touched on already by everybody. Clearly what buyers are looking for is something they can trust. Trust is key. And how do they get trust? Well, they're obviously looking for a market that has well-established rules that are clear and transparent. Those rules are monitorable and enforceable. So everybody knows the rules, everybody plays by the same rules, and everybody follows the same rules. So that's obvious. And of course, these things are being well enshrined in all of the principles that are emerging, such as the BSI Nature Markets principles, which went out for consultation earlier this year. We were involved in that. So it's obvious, you know, the direction in which this is travelling. If we're going to have these markets, then you need that level of transparency, that level of trust. So that's sort of the number one thing, and you know, it's obvious perhaps, but you know, it's worth reiterating. And I think the reason for that is they want to know obviously what they're spending their money for, but they also want to be very clear about the claims that they can make. So most organisations don't want to mislead the public, so you know, there has to be some mechanism by which they can make whatever environmental claims they are making with a degree of confidence. So that's really important too. Buyers are one thing, but the thing that really sort of brings buyers and sellers together is information. And so having the right information that enables both buyers and sellers to make sensible and informed choices, I think, is really crucial. And of course, that's where, you know, we come in. It's all very easy to get seduced by what credits are available and what money is available. But we see time and time again that if you take stock of the actual assets that you've got and the benefits that they deliver, then there's a huge amount of environmental goods that are not necessarily being recognised or understood just how valuable they are. So, you know, we would encourage everybody to really do that, so to look at the full stock of assets they've got and the benefits they provide, because when you look at what's financeable, it's usually a very tiny fraction of the total picture of all the benefits that are there. So we were always encouraging folk to go into this with their eyes open, understanding you know, what their assets are, and not just following the funding, the green finance funding. That's not to say it's not important. Green finance is very important, and it's you know, any funding that helps us do the right thing is obviously very welcome. But we wouldn't want to see the baby thrown out with the bathwater, and you chase, as we've talked before, you know, just maximising carbon sequestration if it impairs biodiversity, for instance, or you know, the recreational benefits of green space is really, really key. So you know, we wouldn't want to see restrictions on access for public health and well-being. So I think that's my, you know, I think they're the key points. But I think we ought to be looking at finding information that enables both buyers and sellers to come together and they make a deal that they're both happy with.
Brilliant. Thank you, Duncan. Some really important points there. And you know, as I've wandered around Groundswell this morning, you know, we can see many people offering green finance products, and you know, the nervousness is that it's the intermediaries that skim off most of the money and not the people who actually provide the ecosystem benefit, which for Groundswell is obviously farmers. So we need to think very carefully about what good green finance looks like for farmers. So Molly's going to introduce that.
Thank you, Rob. Yes, good morning, everyone. I'm Molly Biddell. I wear a few different hats, but I work as Head of Nature-Based Solutions for a regen farming business that's based just outside of Guildford in Surrey, where we grow hops and beef regeneratively and do quite a few nature restoration projects as well, because we've got some chalk downland and heathland that we're recovering. I also work part-time for Knepp Estate, leading their natural capital, so thinking about what nature markets mean for initiatives like our Wheel to Waves 100-mile nature recovery corridor, facilitating our local farming cluster group, and also working on our landscape recovery scheme down the River Ada. So a few different things, but to all of those projects, it's about working as a farmer and with farmers to think about how do we leverage emerging nature markets. So very much wearing the farmer and environmentalist hat, Rob. You asked me about what does good green finance look like for farmers? So the first point that I want to make, which might sound a bit flippant, but it's not supposed to be, I think we have to break down these buzzwords. I think there are a lot of buzzwords in this space, and they often get thrown around and people have to pretend they know what they mean and not question. So the first thing I would say is always question. Find out what everyone means when they use the word natural capital. What do you actually mean? When you use the word nature-based solutions, what are you talking about? What does green finance even mean? It's really important to break those down to make sure that we're all speaking on the same level and we know what we're talking about, because they do mean things, but we need to be talking about the same thing. So that's the first one, less buzzwords, or break those buzzwords down. The second point is something that Phoebe did also mention. For farmers, it's got to be about revenue streams. So green finance, you're talking about the whole space of nature markets. You're talking about investment into nature-based solutions. But the bit that's important for farmers is that revenue stream that can be created through selling the ecosystem services that you can derive from your nature-based solution. So it's really, really important that we're focusing on those revenue streams. Personally, I think it is one of the most exciting times to be a farmer, because we have got so much potential to deliver these amazing solutions that society needs. I mean, who else? If you work in an office block, you don't have the kind of privilege of going, actually, I'm working with land that can deliver flood mitigation, create biodiversity uplift, and sequester carbon. It's super exciting. What we need to be doing is saying, hold on, we've got to pay for this stuff. And how do we create the business case for these solutions that we know that we can generate? So it's about revenue streams. It's about deriving income streams from these ecosystem services and making sure that those income streams are stackable, and, as was alluded to earlier, that they're truly valuing the services that we're creating. So that's my first point. I've got two more. The second one, high integrity. It's been mentioned already, but it is really, really important, and it's really important for us as farmers. These new markets, these new sales, these new ecosystem services that we're bringing to market, they have to be high integrity. They've got to be additional. They've got to be permanent. And part of that is they have to be they have to be evidence-based and they have to be data-based. For us as farmers, that means we need access to the right ways to baseline, to monitor, to collect the right data, to know that that data is repeatable, to know that we can access it and it's affordable. So that is an area that really, really we need much more clarity on, I think, and we all need to, there's a lot of amazing work going on, but we need to continue to work hard to make it clear how we can collect the right data to deliver these nature-based solutions. Finally, as a farmer, and this is really important, these green finance opportunities, these emerging nature markets, they have to fit within your business. So do not let the tail of nature markets wag the dog of land use change. Land use change has to be, that any of the land use change you want to do or any changes you want to make on your farming business have to fit within the rest of your business. They have to be solutions that you want to deliver because they make sense. And then there's this incentive because finally we've got the ability to be paid for them, which is really, really exciting. It's not food v nature. It's not food v green finance. If you're smart, I'm delivering 2 biodiversity net gain habitat banks at the moment. Both of them increase our grazing platform. So actually they fit really well within our regen beef system. So that it's not food v nature. It can be everything. We want to create these multifunctional landscapes. So I think those are my main points, Rob. Yeah.
Brilliant. Thank you, Molly. And I'm in awe of the many, many jobs that you do. I can't... Do you ever sleep at night? But anyway, but really important points there. Making these finance flows, is, you can see this is quite technical stuff, really. So, introduce yourself and just explain, give some comments on how we can make these finance flows properly.
Thanks, Rob. Yeah, my name is Channon. I'm a director at the Surrey Wildlife Trust. My team is purely externally focused, actually. We spend all of our time talking to landowners and farmers within the county. We work on nature-based solutions and providing advice around that. Several of my staff are basis trained, so they've got their sustainable land management qualifications. I also deal with our natural capital, and I'll come on to that in a bit and sort of talk about some of our work there. So my views on this are purely from a wildlife trust perspective. I'm sure other people would probably have maybe slightly differing responses to this. My main observation actually at the moment, and I feel like actually maybe if I did have the answer, Rob, I might be a millionaire to this question, but I'm not, is there's a real disconnect at the moment between demand and supply. So we're not seeing enough land coming forward for some of these green nature markets at the moment. And I think that's for several reasons. I think it can be a bit of a confusing space. I think some of the terms of these agreements, so biodiversity net gain, for example, has a 30-year term on it. A lot of people are uncomfortable with that. It's easier for us to make a decision like that as a wildlife trust because we manage land in perpetuity for nature. But if you're a farmer or you're running another kind of land management business, that's quite a different kettle of fish, I think. And I also think there needs to be more incentives for particularly regenerative farming to participate in these markets. I think it's very hard for people to know where to place themselves. To your point, Molly, around business schemes, etc. We've spent quite a lot of time thinking about this as the Surrey Wildlife Trust. We get a lot of approaches from developers for biodiversity net gain. We haven't particularly done super loads in the carbon market, but BNG, we certainly have done some deals in that space. We made a decision a long time ago that we were not going to use our Wildlife Trust facility to outcompete land managers in any way. Our interest is from the county perspective very much, and lifting everything up to a more landscape recovery scale. So that's quite an important thing to stress, I think. We spend quite a bit of time using our own land holdings because we can as a test and learn space. So we like to understand how these markets work and how, what the pros and cons are, because it means that we're able to better advise people that are also working with our county, maybe from some of our experiences. It's not the only experience, but, at least it's something to draw on. And we also work with a lot of other organisations, so we make quite deep connections and partnerships with, other environmental advisors, for example, to make sure that land managers are getting the best suite of advice really in this space, because it's not an easy landscape to navigate. A few years ago, we participated in one of the NERF projects, so that was a Natural Environment Investment Readiness Fund. We used that for two reasons. We were investigating the topic of a natural capital investment company, which sounds a bit grandiose, if I'm honest, but it was sort of looking at how you could be the conduit between supply and demand within the county. Ultimately, and actually I'm not sure that we were expecting this, but the conclusion was that the Wildlife Trust was the natural capital investment company, certainly for the short term. And we were lucky enough to sell some initial biodiversity net gain units through that process to Shepperton Studios. So it was one of the first schemes nationally in that. I would say that, in my opinion, when we're talking about nature markets, because obviously that's quite a broad topic, BNG is really just the tip of the iceberg. There's a lot of other things that we need to be looking at here. There's lots of topics about whether or not it really addresses enough from the biodiversity perspective and not just the habitat perspective. I think it's going to be really key for all of us, and in Surrey this is newer, to look at how we can leverage our local nature recovery strategy as well. Is going to be absolutely vital for us to participate in that and make sure that we're not just looking at our own land holdings, we're looking at the connectivity across all of us, because it will have an influence on these nature markets. Understanding where we're trying to use the public finance versus the private is probably the $1 million question, and something that we're still grappling with as an organisation. There's also a whole piece, and this is my final point, I think, and it slightly strays into the carbon market, I suppose, now, is around corporates and their own nature literacy and how they understand their own supply chains. And I think until we've got more regulation in that space, it's going to be very difficult to drive some of these investments in nature. We've got some of it coming through now in TNFD and all of that kind of stuff, which is great. But until we get more regulation and compliance in this space, it won't force the discussion in the right direction. I'm bound to say this, but I think nature should form part of any company strategy, whatever they're doing. And at the moment, it's not deeply embedded enough to make a difference. And that means that it's not driving down into other land management businesses like ours, farming, and indeed other areas. So, I mean, that's my view in a nutshell. There's probably a million other things I could have talked about, but I wasn't quite sure where to take it, really.
Well,
Big
thank you very
topic.
much. Thank you very much, Zoe, and thank you, panel, for introducing this thing. Molly asked for simplicity in terminology, and we've used terms like BSBI, BNG, TNFD, SFI. I mean, this is a very technical and complex subject, but there is a path through this. So there are no silly questions. This is not straightforward stuff, so please do ask the silly question, the obvious question, because it's probably the best question. So does anybody have any questions for the panel? Yes. If you want to say your name and give the question, that'd be great. Oh, we'll get the microphone so it can record it.
My name's Andrew. A question about scalability, and what do you think are the barriers to scaling this to, I guess, significantly bigger than what it is? And I guess related to that, what do you see as the role of the finance industry in helping scale?
Okay, so we're talking about scale here. So this is a pretty new market. I think I go to a lot of discussions like this. There's a lot of talk. There aren't that many trades in the market, is my perspective across the UK. So we really got to scale this up to make a difference. Who wants to begin? Molly.
Okay. Is that on? Oh, there we go. Fantastic. Okay. Really important question. Again, I'm going to come from the farmer's perspective first. So one of the critical questions in scaling in terms of actually delivering, as Zoe said, getting that land up there to say this is ready to deliver a nature-based solution on. It's just that collaboration point, Elizabeth, to what you said. So it's just, there's quite a lot of risk in collaborating at the moment, particularly collaborating with lots of different partners, but it's a really exciting, hopeful area, and that's when you look at the potential of clusters and super clusters to deliver at scale and provide actually investable projects because they're scaled to the extent that they can be investable. That's really exciting. So from a deliverability space, there are solutions coming through, and it is about collaboration, and it's about bringing lots of people together. From an actual trading perspective, like why are there not that many trades? It is to do with a lack of drivers for demand in the marketplace, and that is due to a lack of environmental regulation, in my opinion, on corporates. So, for example, just a thought experiment, if you were to properly apply polluter pays principles, so to say every polluter has to pay across the economy, suddenly you'd have so much demand. So actually, I think we are looking at regulation as one of the barriers to scalability. Yeah, these are my takes.
Really interesting point about polluter pays, So we are beginning to make developers pay, for example, nutrient pollution. That's through the nutrient neutrality regulations. Imagine if we did that to all the drivers of nutrient pollution in our landscape. Could be really significant. The other part of that question was about financing, the role of finance to scale up things. I'm looking at you, Elizabeth, from the UK Nature Fund perspective. Do you want to give a perspective on that?
Yeah, so, I mean, Molly has spoken to the kind of role and the need from the farmer perspective in building that scale and making more projects investment ready. But I think there is definitely that role for regulation and creating that demand. There is also the role then from the finance community, and I would include the finance community to include corporates as well, so buyers of units and credits, to help support that investment readiness. So to not just think that you can come in and just be the investor. Actually, there needs to be that support for building the investment readiness of farmers, of projects that then can go forward to actually sell and trade units. There's also a role in being realistic in terms of expectations. So obviously setting up ways to ensure that there is that community benefit that I said, rethinking structures so that you are building in that high integrity, buying verified units, for example, rather than not. And so there's a number of ways that the finance community can support that scale, and part of it is a bit around expectation, but around terms and structuring in a way that's going to really deliver that value on the ground.
Thank you very much, Elizabeth. Now, has anybody else got a question for the panel here? Yeah, we've got a questioner over there. Oh, no, over there. Fantastic. If you can just give your name and the question.
Hello, my name is Axel. I come from the built environment, so I'm an urban designer, and we've also been facing the question of BNG and picking up on the notion of trust, breaking buzzwords, and also the question of reliable assessments. Where would you say we stand at the moment on BNG? Because I feel like for our industry at least, BNG relies heavily on mathematical modeling at the moment and some field measurement. But do you see a flow of a convergence of common assessment, and that would contribute to building that trust and potentially then supporting higher BNG targets? Because at the moment, even 10% seems really big for a lot of players.
Phoebe, do you want to have a bash at that one?
Yeah, definitely. So in terms of sort of biodiversity net gain and the metric and building confidence, I think we can't underestimate what biodiversity net gain and nutrient neutrality have done for sort of green finance. As much as sort of we've said they're the tip of the iceberg, they've started the conversation. They are building confidence, and we're definitely speaking to people in the spaces of sort of voluntary markets, and they're wanting to see the DEFRA biodiversity metric integrated within that as sort of a bit of a quality mark. And I think if we're also looking at sort of potentially we want to deliver scale, it might mean that these large sites, they're not funded by one income source. It's not just biodiversity net gain or carbon. We need to make sure that all of these metrics and credits can interact with one another and have that sort of common, consistent language. And I think the DEFRA metric is a really good starting point for making sure that they can all sort of speak to one another. That being said, I do think there are some issues with the metric, and I think it is difficult. I think one of the things we're finding is that you can use the metric to create really high quality small spaces for nature, and we see that this is actually reducing the amount of space for nature. So more units doesn't necessarily mean more space. So I do think we need to do a bit of work on what good practice for biodiversity net gain is, and how we can use sort of biodiversity net gain in sort of nature-led models, because at the moment it can be quite restrictive, particularly for sort of mosaic type habitats. But I think it's a really good sort of starting point for sort of building confidence in the market.
A really important point there, Phoebe, about biodiversity net gain, of course, is a brand new compliance market. It only started a few months back, and we're in the first round of it. It's bound to be a little bit, imperfect at the beginning. So it is incumbent on DEFRA Natural England to look at how biodiversity net gain is panning out, and think, there's talk about maybe having another biodiversity revamp in a couple of years' time. Is that quick enough? I mean, I'd question whether it is. I think there's work to be done there. Zoe, the other part of that question was, 10% too much for developers? What's the view of the Surrey Wildlife Trust, which I know is a bit different?
Yeah, you're not going to like this answer. So we have a 20% biodiversity net gain red line, basically. So really, once you've gone through your on-site stuff and the off-site stuff, 10%, to Phoebe's point, doesn't really end up being that much delivered into nature. So we have quite a stringent ethics policy. So we look into everybody that we're doing business with. We have to assess the base organisations. We've got a membership organisation. We've got our own reputational risks. But 20% is a red line. And if developers don't want to work with that, then we seek to help connect them in with other land managers potentially in the area. And I know you said that the 10% seems quite high for you, but really, let's be honest here, we are in a nature, biodiversity and climate crisis, and unless we make some hard lines and some hard changes here, some of this stuff isn't going to change, and it's organisations like ours at the Wildlife Trust that really have to toe the line. So we spend a lot of time working with people. I think one of the things that I would say to you is, use ecologists, work with ecological organisations. We're quite happy to work in partnership with people, provide advice. We don't have to feel completely alone on these topics. We can actually work together. Just because our industries and sectors are slightly different doesn't mean that we can't provide help and support to one another to navigate these new markets. So, use people around you to kind of help inform, because actually sometimes the pathway forward is easier than it might seem when you bring other people into the perspective.
Just to add to that, I think there's a really interesting study that was done by Kent County Council, I think, which was looking at sort of the difference between delivering 10, 15 and 20%. And the findings were actually that for the developer, it didn't sort of impact them significantly to be going to 15, 20%, because once you've gone to 10%, you've done all the metrics calculations, 15% isn't actually that much more when you're looking at sort of the budget of the whole project. But obviously being mindful of like the different budgets and margins of different projects, particularly in different parts of the country, is worth noting. But yeah, wherever possible, we are pushing for above 10.
And of course, I'm meant to be a neutral chair, but indulge me for 2 seconds. This is all about trying to move development from, in the past, you could build a housing estate, destroy wildlife. You're meant to mitigate, but you actually hardly ever do. And this is about moving development into a paradigm. It's a paradigm shift where development doesn't destroy wildlife, it enhances wildlife. Now, development is permanent. Those houses should last forever. So why shouldn't the biodiversity net gain be permanent? So there's one example where we as a wildlife trust are trying to say, actually the biodiversity net gain should be permanent, not just for 30 years. And that's quite interesting. And that's a challenge to the farming industry, of course. Any other questions out there before we wrap up? We have a question. No, we're going to take a question from yourself here, because this is my friend in the Wildlife Trust and she talks to all the time.
Hi. This might be too practical of a question, or maybe it will be helpful. I'm Zoe. I come from the Soil Food Web School. So we train people on regenerative agriculture. We mainly train people that want to become consultants and some farmers. And my question is, we want to support our students. And the more we support farmers to get in the business, and this is a great opportunity for them to make more money. So my question is, if we as a company, where do I go? Where do I start to, unravel? What can I tell these people to look for? Where can they go? Which door? I wrote down 5 names. Do I start knocking on your doors? Is there some central place? Or is this just now being brewed and it's too early?
Okay, thank you very much, Zoe. Duncan, you started all of this, so what would be your advice?
That's a very good question. There are so many schemes going around, and it's hard for people in the marketplace to keep pace with all of the changes. So it is pretty difficult. I think I think you just have to sort of look at the schemes one by one, really. So there's the voluntary carbon market, and there's no substitute for just getting to know the mechanics of each of these things. And then there's the BNG market, and you need to understand the metric to get into that. So I don't know of any sort of easy way into this other than just grappling with it. So start off obviously with the established markets. So BNG's been operating since the beginning of this year, and obviously the voluntary carbon market's been around a bit longer. But then nutrient neutrality is kicking in. That's quite important. But it's not just the financing schemes. I mean, Elizabeth's mentioned the fact that supply chains are actually looking to fund an awful lot of change. So if you're a farmer and you're in a particular industry, one of the good leads into this might be the supply chain that you're already hooked into, or the buying groups. Then there's all sorts of groups out there. So I suppose my advice would be to make contact with a suitable sort of supply group or a network or a farm cluster that you know quite well, and they will probably know people who can get you up to speed with these things a bit quicker than most others. So it's always about looking for people locally who've sort of been through this before, and they can fast track you through the process. It's the only way, that's the only way I think I could offer, unless anyone else has got anything more concrete they can offer.
Yeah, I'll go and then you. But so I think on an even more practical level, there's loads of incredible resources out there. The Green Finance Institute have got a farmer toolkit, which is really good for looking at how you as a farmer can access different nature markets. There's loads of case studies on there. The next point of call I would say was the Wildlife Trust, your local wildlife trust. I suspect Molly might speak on this, but most local wildlife trusts have got farmer cluster groups they're involved with, landscape recovery projects, which we've pinned over on our map there. And a lot of wildlife trusts, I'd say probably like 90%, are exploring green finance delivery at the moment. So they can provide that on the ground sort of support. But yeah, I'll hand over to Molly.
Yeah, I completely agree with you. A Green Finance Institute's farmer roadmap is really, really good. And because everything is emerging, it is about just talking to people. Just get out there. I can't tell you the number of interesting conversations that you end up having every week with people saying, oh, we're working this as well. What are you finding? What are you finding? But yeah, so I don't have much to add other than to say exactly what you've said and find interesting people.
Brilliant. Well, we're going to wrap up soon, but we can take one more question if that's all right. So, man at the back there.
Thank you.
It should just go.
Thank you. Stuart Patterson from Royal Veterinary College. One of you mentioned corporates asking for information, what's the evidence for this? I just wondered what you think the knowledge gaps are and how strong you think the evidence is and where you'd like universities and other organisations to be supporting you.
Who would like to? Elizabeth, you're going to have a crack at that one.
Sure. Yes, we'll answer in two parts here. I think there is quite a lot of significant gap. So obviously corporates are being driven in some part by some regulation. So the Task Force on Climate-Related Financial Disclosure, try to not use the acronyms, is requiring a number, it is mandatory in the UK, so it requires a number of large corporates, financial institutions to be reporting on their impacts and dependencies related to their climate, particularly. In the terms of direction of travel, TNFD, the Task Force for Nature-Related Financial Disclosures, is likely to also become mandatory. And so that is driving corporates to then ask for that data from their supply chains, from farmers. There is then the question around who should be responsible for paying for that data, and do farmers really need another job to be collecting data, and is there then a role for others to provide? So there's a range of methodologies and tools out there to help farmers with collecting that data, but also universities and others to be supporting farmers in the right approaches and methodologies as this whole area evolves and new tools are coming out and new ways to streamline. But yeah, I think the point around who pays for that and where the supply chain then can be supporting farmers is really important as well.
Well, look, thank you very much. And we're going to wrap up now. So I'm going to ask all of you just to quickly finish off with 1 minute on what does the future look like for good green finance. Let's start with Zoe.
Right, thank you. So I think this is quite hard to summarise, but I think biodiversity still needs to morph. So to your point where we just keep looking at it and keep learning from it, I think that's absolutely key. People are already talking about the concept of biodiversity credits. What does that mean? And I don't mean the statutory credits that you can buy if you can't offset using BNG credits. I definitely think there has to be more regulation. Until some of this stuff is regulated, it doesn't incentivise people to participate. To your point on corporates, unless some of this stuff is driven by the C-suite, so the top exec downwards, companies aren't going to do it. They've got no incentive to do it. They've got all sorts of other things that they're looking at. So regulation and mandation is absolutely key. And I think the food and agriculture arena need to be more involved and more incentivised to participate.
Thank you very much, Zoe. I'm going to pass to Duncan now.
Thank you, Rob. I think to conclude, I think good finance, well, we always say any intervention needs to have 5 fundamentals. The first is it needs to be ecologically viable, and that's very spatially specific. Is it the right ecology in the right place with the right soil, the right climate, etc.? So ecological viability is absolutely key. Secondly, it needs to be economically sensible. Are the balance of benefits outweighing the costs? And, that's obvious. The third is it fundable? Will somebody pay for this? So is it financeable? The fourth is is it acceptable to local stakeholders, which is why the community issue is so important, and it's really, really vital that it does fit in with local stakeholders' acceptability. And finally, of course, it needs to be consistent with policy. So there are 5 essentials that need to be there. I think if any finance project is going to make sense and be viable and sustainable in the long run.
Brilliant. Thank you, Duncan. Molly, I'll throw the question to you now.
Thanks, Rob. So we haven't spoken much about skills and people. So for me, the future is about those green skills that we need to really scale up this nature market, green finance space. We did talk about needing an ecologist. I think every farmer should have an ecologist on their shoulder. I think every developer needs an ecologist on their shoulder. I think if I was looking for a career, I'd go into ecology because they're going to be in demand. So I think it's about thinking, what are the skills that we need? And also seeing that as a really exciting opportunity for all those people that want to be working in something where you can deliver impact. Then this is a really exciting sector that has a lot of solutions and needs the skills to help deliver those solutions.
Thank you very much, Molly. Just great, isn't it? Ecologists in demand. When I started out on this career many eons ago, we were absolutely useless as ecologists. Trying to get a job was almost impossible. So things have changed for the better. Phoebe.
Fab. So what's next? I think hopefully we will have some voluntary credits somewhere on the horizon that build on biodiversity net gain and allow us to talk meaningfully to corporates, companies, organisations that aren't just developers about what they can do and what they need to do, along with what Molly was saying on sort of polluter pays. But also what I think is sort of coming along, and we probably need to do quite a lot of collective work on this, is markets in climate adaptation and resilience. So we haven't spoke much about it, but natural flood management, we know we need it. We know how to deliver it. We just need to sort of grow that market and really grow the demand. We know who benefits from it. So I think collectively as a sector, we need to be working on sort of natural flood management and delivering services that are delivering those wider co-benefits.
Thank you very much, Phoebe. And last but not least, Elizabeth.
Thanks. Yes, well, building on that point, I think the future is a growing number of areas, building also on your point, that people will pay for. And the way that people will pay for that is that we have better tools to measure those outcomes and better ways to show that actually there's a range of health outcomes that are delivered by nature and that insurance companies or others in the health community should be willing to pay for those outcomes. And so the future I see is a growing area, a number of markets, and underpinned by really robust methodologies to increase the revenue streams for farmers and landowners overall.
Well, look, thank you very much, panel. It's been really interesting discussion. Farmers are often called the custodians of the countryside. Honestly, that's not always the case. We know that. We know that's the case. But equally, farmers aren't paid to be custodians of the countryside. They're not paid to deliver the sort of ecosystem services that we know we all need. So green finance is one of the ways that farmers can genuinely become those custodians. We need good regulations, good policy. So we need to work with our DEFRA colleagues and so on to make sure that those regulations get into place. Actually, we need to work with the Treasury more than DEFRA on this sort of stuff. We need to do it right. We need to do it right as individual farmers, as landowners. We need to provide those exemplars and talk about those exemplars. We need to build the skills base. There's going to be a fantastic load of jobs out there for this. This is really going to change the industry. And we need to expand the sorts of services that can get paid for. So voluntary biodiversity net gain credits, coming off the back of the Task Force on Nature-Based Financial Disclosure. Golly, that's a few acronyms there. Natural flood management, water quality credits, all of these things need to be built up there. But there really is a tremendously exciting future here in green finance, and that could genuinely unlock the finances for regenerative agriculture. Let me just finish with thanking you, and thank you, panel, in the normal way. Thank you very much. Now we have a report with the soil